Good evening, everyone. Um, I'm going to talk about how to spot a reversal trade using the opening price theory and a little bit of market structure theory as well. So, because a few people that have watched my videos by now, they should be able to spot that. But I want to actually elaborate the concept furthermore so that it is more easier to spot. Uh, so I'm going to be using GDPJPY. Uh, so first of all, when you are in the market, when you are trading, when you're about to start trading any currency pair, there are things that you need to outline for yourself. So first of all, you have to start with the weekly time frame. The weekly time frame, followed by the daily, followed by H4, 4 hours, followed by 15 minutes, 15 minutes. So at this level here, at this 4 hours level here, so if you're the one that loves to trade with 1 hour to 5 minutes, so at this area here, you go for 1 hour, then your down destination will be 5 minutes. So this is how to start. So now where are we? We're in the weekly time frame. So how do you read the structure to know if you're bullish or you're bearish? So high low, high. So presently the part two has been what the part two is showing us here is showing us that we are what? That our weekly is what? Our weekly is bullish. Our weekly is bullish. You might be confused, like, okay, this is supposed to be the swing for weekly to break before, you the moment 2 week candle has engulfed this bearish move. We already have a shift to the bull side on a weekly time frame. So, and this we have here is serving as our weekly candle retest into this area, and you can see this week already I started buying back to the upside. So now weekly is bullish, so let's take it. Let me take this off. Weekly is bullish, then we'll move to daily. So remember, time frame alignment is one of the key factors and areas that you have to consider. So now let's look at daily. So I take my past two. Okay. Daily is now bullish. Daily 2 is bullish. Daily is bullish now. Okay. So daily is bullish. We establish that as well. Then we'll go to 4 hours. So 4 hours is also bullish. But what do we have in 4 hours? We have this 4 hours candle trying to retest this area, try to come test this demand zone, because this area now as is now a demand zone. So if you can say price broke it and price is coming back to actually retest this area before continuing to buy back up. So now how do you take the reversal of this trade? Because this is actually going to be bearish on the lower time frame. So how do you trade the reversal back up in the lower time frame? So from here now we look at 15 minutes first. So in 15 minutes we are bearish because of those 4 hours candle trying to test the demand zone. These are things that you have to put into consideration. So what do we do next? We see, let's take our part two. You will see how clearly bearish we are. We have structure, then like that. Yeah, where you can see that we clearly we are bearish on 15 minutes. So if you are bearish on 15 minutes, we're going to be bearish on 5 minutes as well. So now how this is 15 minutes is bearish. So how do we take the reversal trade back to the upside? So that is what I'm going to be talking about now and explaining. So because the reversal here now is we're waiting, we're trying to capture exactly and how to enter when price has shifted back bullish on the lower time frame. So that is the type of reversal I'm talking about today. So now the first thing to look out for, since we have, what do we have here? So I'm going to go to 5 minutes because I know people, a lot of people take their entry from 5 minutes and 1 minute. So let's use 5 minutes for our example for the reversal entry. So let me take this out. Let me take this out. So we're going to be using this reversal. We're going to be um, using the opening price theory to actually help us navigate the reversal trade that we're about to take. So now we have, I'm going to take my part two, then let's measure those structure that comes to the downside that makes it bearish. These are structures that made it bearish. These are structures that made it bearish. Okay, so you can see how clearly bearish we have. So in this bearish move, what we are looking for, don't forget that all our higher time frames is bullish. We're looking for our selling climax. We look for our selling climax because even the sell started from here, but I tried to take it from here so that you will be able to see the candle uh, big enough when I stretch it. So, and don't forget this area here inside this box here, it is the demand area. This area here in the box here, it is what the demand area. Which demand area? So this is the 4 hours demand area here. 4 hours demand area, demand zone. This is the 4 hours demand zone. So now what are we looking for here? We're looking for the selling climax of this 5 minutes bearish move. So how do we figure out the selling climax? In my previous video, I mentioned it that if you want to know when you're selling climax, your selling climax means when the selling has been exhausted. So you need to check for the swing, because when price is selling, price will always do the premium. Price will come premium sell, premium sell, premium sell, premium sell, premium sell. So those retracement that price has done in premium to sell, you have to look for the one that has the deepest retracement, the deepest premium. So the moment you figure out we have the one that has the deepest premium close to the demand zone, that is going to be our selling climax. So the selling climax is going to signify what? It's going to signify that okay, selling has been exhausted. So which retracement do we have here that is much more, that is much more um, uh, deeper than the rest, that is close to the demand zone? So if you look at it here, you will see that the one that is close to the demand zone is this area. So let me take this box out, but the blue line will represent the demand zone. So don't take your eyes off it. So this is the demand zone, 4 hours demand zone. So if you watch my previous videos, you will see I explained this too the in the video, how 4 hours, 1 hour, 5 minutes, how you can get your reversal from it. And I'm using a live market. So if you're lucky to watch this video early, you can tune into your chart and see how it plays out. I don't like to cherry pick trades. I love to use um, live market to illustrate my concept and analysis. So now we've figured out that this is going to be our what? Our selling climax. So what is a selling climax? A selling climax is showed us that sellers are exhausted. It showed us that is the selling has stopped. It's telling us, giving us signs that we are coming to the end of the pull to the downside. So now, after the selling climax, what do we look for next? We look for a test of the same zone. So we already have our test here. You can see the test is here. So the test is normally most, we have two type of tests. The first test will not sweep the climax. The second type of test will sweep the climax. So now, what do we have here? Since we have a test here, what are we waiting for we to know when to activate the reversal? We are waiting for price to come and sweep both the test and the climax. Then there's an important thing here. What is the important thing here? The important thing is that we have an opening price of the month. The opening price of the month is below this test and the climax. That makes this place very important. Not only that, what makes this place also important is that we have the 4 hours demand zone, we have the opening price of the month at the same zone. What again do we have there? The opening price of the month is an institutional level because it's a psychological level. It's a psychological, every true open price is always close to institutional level, which is a psychological level. So once this is being taken out, we are expecting because price has already broken through the 2 week open. You can see it on the top here, the 2 week open. So now we'll be using the psychological level to navigate when to exactly enter and how to enter this trade. So we'll be waiting for price to take out this climax and the test and break up to retest the 2 week open. So from the 2 week open, we'll be looking for our buy entry. So this here is going to be our reversal entry to buy back up. This is going to be our reversal entry to buy back up. So we're using price action, market structure theory, and opening price theory to make sure that yes, we are on the right path. So it is very simple if you pay attention and you practice this. You can see that the first thing I did is to make sure that my weekly is bullish, my my weekly is bullish, my daily is bullish, my 4 hours is bullish, but my 4 hours is making a retracement back to the demand zone. So the retracement of 4 hours causes what? Causes the bearish move on the lower time frame. So now our reversal is based on the lower time frame uh, bearishness. So how to take the reversal back to the upside. So this is it. You can screenshot it. If you're lucky to watch this video today or tomorrow, if the trade has not activated yet, you will be able to see exactly everything that I've explained, and you see how genuine and how accurate this is. This is like 80% to 95% accuracy if you use it properly and you pay attention while you are using it. So this is how to take a proper reversal using market structure theory and using opening price theory. Thank you. God bless you. If you have any question, if you want me to go further with this opening price theory and the reversal trade, please comment below and don't forget to subscribe and like. Thank you.